Hello and welcome. Today we're going to look at empty chart TA. What do I mean with that? If you think of it, we have quite a number of tools. Everything from Euler's exponential for this bull run, which I believe has been the best prediction model for this bull run of all the models I have seen out there. We have the potential global model that have taken over from the local, we're not fully sure. We have principal component analysis and a bunch of other advanced technical analysis tools. But what happens if we start all over from a blank sheet of paper? This is very useful to do sometimes, in particular if you are in a stage where you're not fully sure if you trusted tools that have been working for 32 months now, if you look at, for example, Euler's. It has only been working for 32 months, the previous bull runs also, and it stopped working, and then we need to calibrate a new one. So if it has stopped working, if we start from a blank sheet of paper, what kind of assessment would I do? Before we jump into this, there's no financial advice in this video or any other video on this channel. As you know, just a crazy person sharing crazy ideas. So the question is, how will we address this totally unbiased? What kind of patterns do we see here? There are many ways to do this. I will do a very simple one that I've used many times before, and always good to take a step back and compare. Where do you end up if you start with a blank sheet of paper compared to the models you have? Is it approximately the same or is it totally different? So let me show how I'm thinking here. We are using just the recent data, and the reason for that is that if you go back and look at Bitcoin, the volatility, standard deviation, frequencies, oscillations, other pattern, multidimensional patterns in the principal component analysis, they are continuously changing and developing. So it probably doesn't help us too much to go too far back, because we will just find patterns that are not applicable anymore. If you look at the first time we reached 74, I think it was here, we had a little bit of consolidation at 50k and then it took off. At that point in time, we were on this channel quite confident that we would go down and retest this 50k level. And the reason for that was that the volume bars, when we went from 50k up to here, increased, and large volume bars often means that there's a cat and mouse game playing out between the market makers and retail. Investors buy slowly on every day or every level, meaning at every level Bitcoin is at, so they don't produce very large volume bars. From that top to the bottom, it took 5 months and we dropped 32%. Then it took all off again, and yeah, we did meet this level as expected. Then it took all off, and in the next phase we did something similar. Here was the same. We had low volume bars up to this level, and then it took off with higher volume, which means cat and mouse game. Market makers are playing with retail, liquidated them. People took shorts, people took all kind of things because the indicators that were used for previous bull runs were fooling people in this bull run. We have indicators already here calling the top. We have indicators here saying sell, and then it took off. Exactly the same thing happened both times here. This one lasted for 4 months, 30% drop if you calculate from the first top. The other was slightly higher perhaps. Then it repeated, but this time around we have not been able to draw a line in the sand where we should bounce, because this increase here didn't really had this spike in candles, in volumes. It could be that it happened that it was clouded in the noise of everything else. But this time around I have not announced any specific line in the sand as I did the previous 2 times it took off. I announced it 74k also, and sure, it turned around at 74.5, but it was pretty close. The 50k was also pretty close. And that have complicated things a little bit. But if we just look at the simple structure, the time and top here, where we are right now, we have dropped 25%, and time since the first top is 4 months. There is a pattern though. First bull run, this top was the highest. The first section, I should say. This top was the highest, the sequential top was then a bit lower. Second time here, the second top was the highest. And now the third top was the highest. It doesn't matter too much if you use this first top or the second top, but the drop is 25% from this top, a little bit more from the second top. And the time is 4 months, which means that there's some kind of repeating pattern here, kind of 30% down, 4 or 5 months, and then we take off. So the question is if this repeating pattern will end up something in between these 30-32%, 4 to 5 months, or if we have a trend with shorter times and shorter drops. In other bullruns we've had that. In such a case we should have taken off already at 3 months, which we apparently didn't do, or we should take off it before minus 30%, maybe at minus 25 or minus 28 or something like that. But what you can say is so far this type of pattern is quite similar to the previous patterns. There's nothing dramatic happened actually. And in both of these patterns, people called tops and bear markets, and people were super scared. And also we had all kind of fundamentals that scared people up. There's a big difference though, and that is we are in a quarter when the bull market usually ends. But we didn't have a blow-off top, so it's still not the same as the previous bull runs. But what if this earlier pattern would repeat? Where we end up now? Because one option is that we actually are going to bounce from here at 94k. That's not impossible at all. But if we will have, what shall I call it, a delayed bounce, when will that happen? If we have 5 months there, as we had previously one time, and a 30% drop from this top, we will end up at 86k or something, and then we will in that case take off in next month in December. So we'll go down all the way here and then take off. So anything from where we are now down to here is a pattern repeatingly quite perfectly from previous patterns. However, it is a slight deviation from Euler's exponential and previous bull runs where these things have happened with shorter time duration every time, and then we should have taken off somewhere here if we were following previous bull runs perfectly. But as I've said previously, this can also be a sign that we are transition to a prolonged super cycle. And I'm not now talking about that the top is in Q1 or Q2 2026. No, I'm talking about that this extended bull run could continue for several years or a decade. It did do that for gold. When gold got an ETF, we had a 10-year long bull run, exponential bull run. We covered this yesterday in the members videos, and I will come back to it soon again. If this is a super cycle, where will it take us next year and the year to come after that? And where are the confident limits? Where are the points, the line in the sand that we can say we're still following a super cycle or we are not following a super cycle? So far, for 3 years, we have been following a super cycle. But we've also been following a local cycle for 3 years. But this is the first bull run where the super cycle and the local cycle both are predicting the market. Previous bull run, the super cycle model did not predict the market at all. It was several 100% off. Now this time is different. But as I said, short term, we start with a blank sheet of paper just to see where do we end up. Does this look normal or is it totally abnormal? Is something blown up, so to say? It looks pretty normal. So far we have not violated any previous pattern. Actually, we are repeating the patterns we've had in this bull run since the ETFs come. We're just repeating it a third time. With that said though, usually this repetitive pattern happen 3 times, then the 4th time too many people will start to figure them out and believe in them, and then it's usually when something different happened. Just as we have had 3 normal 4-year cycles doesn't mean the 4 will be a normal cycle. Usually it's not actually. Well, that was a short update for today, starting from empty chart. Always good to do that once in a while just to get some kind of sanity check to see if you're totally lost in your models or if things still make sense. I think they still make sense, and I think this practice is good to do. And please do it yourself. Maybe you find other patterns, other ways to do that. Please share that, because in fact, machine that always have the answers to things. But my intent is to give new perspectives that you can take in or not take in depending on. Anyway, thank you very much for watching today. I will be back soon, and thanks for the support. See you soon.